Stock of the day is the gold miner St Barbara and its smaller peer Genesis Minerals have agreed to merge. A lot of M&A going on at the moment, actually. That combined company to be renamed Hoover House. The $541 million deal to buy Genesis will allow the combined entity to focus on the highly prospective Leonora district in WA. And St Barbara will also undertake a demerger of its non-Leonora assets, Atlantic and Simberi operations in Papua New Guinea, which will be held in a company to be known as Phoenician Metals. So, Gaurav, what do you think of the move?
Look, there's been talk of consolidation in that Leonora space for years, as long as I can remember, and this is the first time someone's actually come up and mopped up all these little operations. It makes sense. I can see the case for doing that. I think the test really is, in my view, Leonora has never been, there's a lot of gold there, no one's really made a lot of money. And I've always suspected that, the grades are low, it's deep in the ground. I suspect the economics in this area just aren't that great. But it could be that with the achievement of some scale, you might be able to run a lot of volume through centralized processing and you could make money. I think that's going to be the test here. I'm by no means rushing out to buy Genesis or whatever it's called now, but this is an interesting idea. It's an interesting experiment. I'll be watching this closely. It's about time someone actually mopped up this area and had a go. It's pleasing to see someone do it and do it rather sensibly, I think. St Barbara has been a mess for years, like some of the worst capital allocators in the gold industry. They've been mining this Gwalia mine almost profitlessly for years and almost decades, really. So I'm a little bit skeptical about how this will work, but I'm really impressed that someone's made a good go of it, and the plans look sensible. I think it's a good experiment. I'll be watching with interest. Certainly won't be picking up stock. We're in an environment where gold stocks generally are just incredibly cheap, and there is no need to go up the risk curve. You can play an easy game here, picking up good quality assets at very cheap prices. You don't need to do this, so avoid for me. But interesting experiment. Keep watching.
Yep. Okay. Phil.
We've got a buy on Santa Barbara, and for me, the proposed deal actually looks pretty good. So both companies are around about 500 mil market cap. Put them together, get a bill. Sweet spot for a lot of investors to get a lot more liquid. Gold price seems to be recovering. I can't pick it, won't try to, but someone told me it hit the Golden Cross or something last month, and it's
that's how you do it. Finger in the air.
It's Golden Cross, so it's moving in the right direction. So happy days. But they've also got rising costs, labour, diesel, all that kind of stuff. So consolidation makes absolute sense, especially if you're at the smaller end like they are. You put two together, you get greater access to labour potentially, you can share some infrastructure. So I think what they're doing on paper, based on what's been released this morning, sounds like it makes sense. We already have a buy on Santa Barbara because of valuation, because a lot of
it is super cheap, isn't it? It is so cheap. Yeah.
Add some economies of scale and some synergies. It looks okay. I'm not the resources analyst, but have no reason to believe we won't change our call on this one. I still think it's Santa Barbara's a buy.
It's worth pointing out that gold is uniquely susceptible to inflation because you're moving so much dirt in relation to how much good stuff you got. We're talking about parts per million when it comes to gold, not much greater. In something like copper or nickel or some of the other base metals, you're moving a much smaller amount of waste, and so you can get away with a degree of inflation. In gold, there is nowhere to hide. The margins are so slim. The amount of gold you're moving is so small in relation to how much waste you're moving. It really bites the equities in high energy times in particular, because this is a very energy intensive process.